Market news now. Asian stocks climbed amid split market sentiment over the prospects of China easing its COVID-0 stance. It was a different picture in the currency markets, where the dollar strengthened against all of its G10 peers. Locally, Gold Fields is standing behind its offer to acquire Yamana Gold for $120 billion, as it believes that the one tabled by two rival companies in a joint counter-offer in what became a bidding war for the Canadian company. Nasdaq-listed Pan American Silver and Agnico threw their hat into the ring on Friday when they tabled a joint $4.8 billion offer to acquire Yamana, catching the markets off guard. But to give us some market analysis, we are joined by Khumalo from Investec Asset Management. Bright, thank you so much for your time. Following the jobs reports and, I suppose, call it hopes of China easing their COVID-19 restrictions, what's driving markets at this stage?
Sure. I don't know. You can choose a sentiment right now, right? Because there's a lot of good news in the market, but there's a lot of bad news as well. I'll start with the good news, which is we're still in the middle of earnings season, and we've seen some decent earnings coming out of companies like Nike, for example, and Starbucks, jumping 8.5% on Friday, after record sales, notwithstanding, basically not operating much in China, and obviously being a forced seller in Russia. So those numbers came ahead of expectations. So there's a lot of good news if you're looking for good news. And at the beginning of the intro of the show, you spoke about the substantial change to the ridiculous zero COVID policy that China has had, thanks to that inhaled vaccine, which is very different. I'm surprised, something like that exists. But anyways, we digress. So that obviously sent the miners, for example, we saw companies like Freeport, McMoran rising about 11.5%, and obviously our own JSE rising almost 5% on Friday on that stance. So there's a lot of good news if you're looking for good news. For bad news, I mean, the question is still around the Fed, so I'll let you ask that question.
Okay, so on the fact, when we get to the Fed, what's the big question then for you following everything we've read, the statement on Wednesday? What are you asking yourself?
I don't know, man. From my understanding as a young investor is that the Fed, is as flawed as every other human out there, right? And obviously this quote-unquote pivot to being a little bit more aggressive is going to be painful in the short term. It doesn't make them look, any good, to people who believed in the Fed. But I mean, it's going to be very tough, investing in the next, call it 12 to 18 months. But once we have, a firm stance that, this is what they're doing with interest rate, which is what they claim, they're going to be hiking these interest rates, and obviously dead certain on that 4.1%, number. So we'll be watching that very carefully. But otherwise, I mean, we all hope that they don't tip, the U.S. economy, into the negative, because that's what tends to happen when they get too aggressive.
Speaking of that potential of tipping the U.S. economy into a negative, I mean, some would describe it as a Black Friday for Twitter employees last week. There's talks about, potential layoffs, these emails that probably went through internally. Do the cuts that we're seeing add any angst to you, especially when you look at the mounting job losses in Silicon Valley? Meta, also a story out of the Wall Street Journal that they're looking at cutting as well. How are you looking at these tech companies and some of the job losses or the layoffs or the holds on positions?
So, the stance was at 0% interest rates, a lot of these growth type stocks, listed and unlisted, meaning, big tech and small tech in Silicon Valley overhired, because, they could only go one direction, which is you're a services business, you grow through, headcount. And if you have more, workers, it seemed like you were serious about being a growth company. And obviously, they stamped a very high valuation to your business, right? And at the pace that the interest rates are going at currently, obviously, the businesses that haven't shown any significant top line and profit growth are starting to actually, we're seeing layoffs there, and obviously they're re-rating to the negative. And, many of these businesses, are realizing that, oops, we maybe hired very aggressively. We saw a letter that came out, a tweet that came out from the former CEO of Twitter and founder, obviously, saying that he blames himself for growing the business too quickly, too fast. And as a result, he's sad to see some of those employees being fired under the new management, which is, Elon Musk's management. So, Twitter is not the only business, like I said. I mean, we've seen it with Meta. We've seen it, I think, towards the end of last year when people were predicting a recession coming into this year or third quarter of this year. We saw a lot of layoffs. The first round of layoffs, including banks like JP Morgan, for example, also announced layoffs earlier this year. So, this is not unique just to tech and growth stocks.
Week ahead, any company news or just general news that you're keeping an eye on?
Sure. Everyone has their eye on the U.S. election. It tends to, affect markets in the short run, who runs the country. And obviously, my eyes are on the, Nate Silver's website, which is called 538, where he does these predictions to see who's going to, take over as, the new party that's going to take over the U.S., which is, one of our oldest democracies out there. So that's what I have my eyes on. And currently, I can see it's 54 for Republicans. So let's see if that stays. But in the past, I must say, I will preface by saying that these polls are not 100% accurate, because not everyone is online. When you talk about online polls and over the cell phone or calls, only older people actually answer their calls from random numbers and actually answer the poll honestly. So it's going to be a tricky one to fully try to pencil in who's going to win. But it seems like the Republican have this one for now.
Right. Bright, let's leave it there. Thank you so much for your time. And as Bright did mention, we have U.S. midterm elections tomorrow. We also have Disney's Q4 earnings on Thursday, U.S. CPI figures. So all of that we'll unpack in greater detail with a whole host of our market analysts during the course of the week.